Morning traders, my name is Neville Hornsey, market analyst for YouTrading. Today is Thursday the 18th of February 2021 and I'm going to be looking at the Canadian dollar, the US dollar and oil prices. Yesterday we had inflation data from Canada which showed that the year-on-year CPI January rose to 1%, beating market expectations. Later in the afternoon, oil prices settled $1.08 higher, having been supported by comments from the Energy Symposium attended by the likes of the EIA and OPEC+, where reports of Saudi Arabia was considering the cessation of temporary and voluntary output cuts as the oil markets are coming back towards long-term average prices, and with the new demand expected to support these prices as the world comes back from the coronavirus lockdowns. The charts are showing a slight disconnect between the usual relationship of lower energy prices as the US dollar appreciates. And we can see now that the US dollar is attempting to break above current resistance, which was formerly support back at the beginning of February 2021. And if we can close above the $91 level on these H4 charts, there could be another 20-cent rise as we target the previous swing high back from the 8th of February, which does also open up the possibility of taken out the February high, but at the moment we are retracing this range, so any sort of sign of reversal could be imminent as we approach this little balance area here. The price of crude has come a long way since April 2020, and after a few months of consolidation whilst the world awaited news on vaccines for COVID-19, the higher prices in the bullish trend have steepened to where we find ourselves today. If we assume that production increases are going to happen to meet these new rising demands and the US dollar stays at its higher levels, a pullback in the crude prices could follow. I've marked up a swing low here on the H4 chart around the $59 as a level I'll be watching, a significant sign of a bearish reversal. But you can see that we are sort of stair stepping up. We're making these sort of big pops and then like a consolidation period before another pop higher, consolidation period. They seem to be a similar size range when they do go into consolidation. So if we get a sideways move again, I'll be expecting higher prices. But as I said, higher US dollar prices would normally make me feel that the price of oil should be coming down. If we move to the EURCAD, just looking at the sentiment indicator on Active Trader, you can see that the bulls and the bears are kind of evenly matched, with the bulls in favour over the bears at the moment, just by a few percentage points. But for me, the EURCAD looks to be seeking its long-term mean price and could be heading towards this downward sloping trend line, which also points towards 1.51. And I closed lower than the swing low printed here on the 21st of January around the 1.533 would be a sign of continued bearish momentum, and that could become held within this balance area, but a close lower than these sort of lows from 6th of May 2020, and we could be seeing this imbalance area here tested all the way back down to the 1.43 areas. The British pound versus the CAD is also quite interesting technically, as we have a case of Canada doing well on the back of the higher oil prices, and also the UK doing well in the fight against COVID with its ability to vaccinate the most vulnerable and hopefully get the economy back online quicker. The charts could be signalling that the Canadian dollar is set to strengthen further as we have a divergence from the price of the two most common indicators on retail traders' charts. This MACD and RSI are failing to make higher highs with the price action, and a break of this rising trend line in turn could hint that a turn in the GBPCAD is occurring on the H4 chart. But for me, there needs to be a break of this significant low from the 4th of February, and then that is actually within a strong support zone where we did have resistance between November and December, and again when it was tested the first time it held. So this could be a line in the sand for the bulls to carry on buying, but a break lower is then targeting these swing lows if you're bearish. Okay, stay safe and trade well, and I'll speak to you tomorrow.